Hello and welcome back to the Dividend Experiment. In today's video we're going to cover possibly the most important concept in the dividend experiment. In fact, it's so important it's in the name of the channel. Today we are going to cover exactly what a dividend is. To fully appreciate this video on dividends, you will first need to check the video called What is a Share? Unless of course you already know what a share is. Okay, let's get down to it. As you know, a company's main job is to make money, or what is called profit or earnings. It doesn't matter what the company does really. Maybe it sells a product or service, but it will not last very long if it doesn't make money. A successful company makes a lot of this profit and then finds itself faced with a dilemma of what to do with it. It has several options. It could reinvest the money in new technology or other businesses in order to hopefully increase the amount of profit in the future. It could keep it just as cash. Apple is famous for its huge amounts of cash stockpiles. It could buy back some of its own shares from the market, increasing value for shareholders potentially. Or it can pay out some of the cash to the shareholders. This is called a dividend. You can see that if done well and effectively, these options can all be beneficial for shareholders. While you can argue about whether keeping cash is beneficial. All four can be beneficial, but only one of these options actually gives us some of the actual cash. This is why dividend investors buy companies, to get a share of the profits as income. What kind of companies pay out dividends? Startup or new companies rarely pay dividends. They usually make losses in the first few years and are more likely to need to spend any earnings they make on growing the company, making it bigger. If you are looking for dividend payers, you should look for well-established companies that have been making money comfortably for several years. Industries that often have dividend-paying companies are oil and gas, banks and financial, basic materials, healthcare and pharmaceuticals, and utilities including telecommunications. Any company with a successful subscription-based business model has a better chance of paying a regular, reliable dividend. What do you need to be careful of as a dividend investor? Well, the first thing to bear in mind is that a dividend is never guaranteed. Don't assume that because a company paid out such and such dividend this year, that they will continue to do it in the future. For this reason, you need to be careful when picking companies for your dividend stock portfolio and do your research on what makes a good dividend payer. For this channel, the Dividend Experiment, I have my own set of rules and you can find them on the 10 Dividend Experiment Investing Commandments video. However, bear in mind that these rules are for a more risky portfolio. So I'll be making a video with some more conservative dividend investing rules at a later date. How do I know if a company pays a dividend? Before buying a company for a dividend portfolio, you need to make sure it pays a dividend. In order to check, you can go to the company's website, then go to the Investor Relations section. In this section, you can find out a lot of information that the company wants potential investors to know, including the value of their dividend and how long they've been paying it for. Alternatively, you can go to Yahoo Finance for a dividend breakdown there too. So that concludes our very brief explanation of dividends and how to find dividend paying companies. If you liked it, give the video a like and please consider subscribing if you would like more videos like this in the future. I'll be adding a new stock to the portfolio every month and making a video about why I chose it, with videos like this in between. Thanks for watching and I hope to see you on the next one. See ya!